This is the briefing for the weekend of July 30th. I want to start today with a little bit longer term chart. This is a weekly chart of the spiders. And as you can see, as this market was trending down, I put out basically support and resistance lines for us to watch. One, as the market was declining, looking especially at this low right through here through 360, which is exactly where it came to, which was this high on a weekly basis. And then, of course, these are resistance levels as the market retraces and goes back up again. Now, one of the things I want to point out here, and I think this is important, is that you can see that the spiders bounced off this 360 level, traded right up to about the 400 level, and then, of course, traded through that and up to 420. Now, we're going to see in a few minutes when I go to a little bit shorter term chart that 410 was a shorter term key reference area or shorter term resistance area. And you can see we closed right around the 411.99 area. So it was really right at that resistance area that the market stalled or stopped trading. Now, we closed at the high of the day in all the indices. That suggests that the market wants to go higher on Monday. It would have continued going higher if the market hadn't closed. But I want to point out a couple things. Now, those of you who've listened to these briefings for a while understand that I analyze the markets in terms of market development. That means the degree of trend in multiple time frames, and market structure, which is the strength or weakness of a trend. So we do have trends that will continue even though the structure is weak and weakening, and that's exactly what we have at this point in time. Now, this is volume in the spiders, and you can see even on yesterday, we had a huge move in yesterday's trading, but you can see that volume even fell off. Now, this is for the week, so this is not a daily chart. This is a weekly chart. So this weekly candle, we had a huge week, I should say, not a day. And then, of course, volume fell off during the week. And this is unbalanced volume, which I use periodically as well because it involves both price and volume. And you can see that it is barely confirming this rotation to the upside. So what we have is we have a trend, and the trend must be respected. But we also know that we have a structure that is not strengthening, and we have buyers that are not increasing. In fact, this would suggest the buyers are decreasing. And we have a weak structure, which then suggests that at some point in time, it is always the higher probability that price will correct to the internals. Now, there is a smaller percentage of time that the internals will correct to price, but that typically happens around a news event. Now, we had a substantial week of news events this week, including the FOC announcement and an increase in interest rates of 0.75%. So those events certainly had the impact of changing the perception of value, and you can see that it appeared that we were actually even turning down. And then, of course, we had the change of perception and value, and of course, buyers came in. What little buyers there are came in and drove price higher. Now, I explained what's happening here to someone on Friday, in that if you look at the market as a whole as a ball, and the whole market is a fairly large ball when all of the participants are participating. Right now that ball has deflated, and while the trend in price and the trend in the market is up, the air within that has deflated some because there are not as many people participating in this rally as there should be if it were to be a really strong rally from an internal perspective. Now, we have to respect the trend of price, but in doing that, we also have to understand that the trend is weak and weakening, and that we have to be aware that that could lead to some type of counter trend rotation or some type of reversal in a counter trend rotation. Now, the other thing is that we know that a trend is a series of higher highs and higher lows, or lower highs and lower lows. And you can see that we have a trend here on a weekly basis of lower highs and lower lows. That has not been broken, at least at this point in time. We're close to it at 420 in the spiders. So what happens the first part of the week is going to be extremely important in terms of whether we see some type of pause in this area or some type of reversal back down, potentially to test the 391, 392 area in the spiders. Now, I want to talk a little bit about total volume. This is total volume on the NYSE. This is total volume on the NASDAQ. And you can see the trend. This is a daily chart. You can see the trend in volume has been down all through the week. The same thing in the NASDAQ. Now, you can see this move here on Friday's trading. We had a spurt in volume, and the same thing happened in the NASDAQ, not to the degree in the NYSE. But I was tracking this chart all through the day on Friday, and volume was extremely low. It was down in this area down here. This spurt actually occurred at the close on Friday. So you can see that what happened was there was a flood of orders that came in right at the end of the day and drove volume up. So we get this volume spike. And you can see that periodically we do get volume spikes. You can see the trend here was down, but we had a huge volume spike on this day. The trend of volume was up here, but there was a huge spike on that day as well. Same thing, the trend of volume was down and a huge spike. Same thing in here. So I'm not giving this really a whole lot of credence because typically that happens periodically at the close, where a flood of orders will come in right at the close, and you see this spurt in volume. So basically the overall trend in total volume is still down as far as I'm concerned. Now, looking at the overbought and oversold condition of the market, this is the NYSE, and it is at a point of being overbought, but not extremely so. And the NASDAQ is at a point of basically being neutral. Now, once again, the indicator is converged. You can see all three lines are basically in the same area for the NASDAQ, which suggests a tightening in the market, and that would then suggest a potential break in one direction or another. The NYSE is at a point where it is also converging, not quite as tight as the NASDAQ, but that would suggest that the potential for some type of larger move on at the first part of next week is certainly there. Now, this does not preclude the NYSE from moving higher. I want to state that because this is not at an extreme. You can see we did get at an extreme at this point right here, which led to a trend in price to the downside. But so we could still see this move up into this 2000 area, and the same thing with the NASDAQ. So while this isn't really giving us a good indication as it does when it's in extreme overbought or extreme oversold territory, the probabilities are higher that you're going to see some type of counter trend move if that happens. But it does give us an indication that there is a tightening within the market and that we potentially could see some type of rotation or another huge buying spree that would come in on Monday and bring this up to an extreme overbought condition. Now, looking at a little bit shorter term charts, this is a daily chart. You can see volume still extremely low in the spiders. This is spider volume, not total volume. And then you can see this three-step move that right up to 410. Now, on an intraday chart, there was a pause right here at 310, which is typical when you come into a key reference area like that. And then, of course, going into the close, we had another run up in price. Now, 420 is the next upside resistance in the spiders. Very important area. 410 is extremely important in the spiders to the downside. And then, of course, the high and low of Friday's trading are extremely important as well. Those are your support and resistance areas. Watch what happens if they are traded through, and especially watch what happens if there's a higher high on Monday, but breadth is diverging. And you can see breadth was diverging on Friday, even though we had a higher high and traded through this 410 area. If that continues, then that's going to suggest the potential for some type of rotation to the downside, potentially on Monday and or Tuesday. But I always want to be aware of traders that come in the following trading day, try to drive price higher, breadth is weaker, and the market is unsustainable at that point, and you see a rotation back through the previous day's high and potentially through the previous day's range. So watch breadth carefully on Monday, especially if there's a higher high above Friday's high. This is the Qs or the NASDAQ. Same thing occurred here right up to this 320 key reference area. Watch what happens here. If the NASDAQ reverses from here, that would be a significant event. The support comes in right at 298, which is the upper extreme of this area of rotation we just broke out from. And the Russell is basically the same situation. Upside resistance is 190. Downside support comes in right at 178. Now, I want to point out one more thing on the intraday chart is what's happening here with breadth. Now, you can see this rally that broke out from this area of rotation broke out, and you can see the divergence in breadth right into that high. Then, of course, we got the rotation down, which retested the breakout point. And then, of course, the explosion or the explosive move to the upside, which we saw over the last couple days of trading. Breadth expanded, but now, once again, you can see over the last 2 days of trading that we're getting this divergence once again in market breadth. Be very careful on a higher high on Monday if breadth is not expanding. If breadth expanded nicely on this day, as you can see, it eliminated basically the divergence here, and that supported this move to the upside. The same thing is occurring in the NASDAQ, only to a greater degree. You can see the rotation down that occurred as a result of the divergence in breadth. And then, of course, we're getting the same situation here on an intraday basis where breadth is declining. And it is virtually impossible for an index fund like this or an index to continue to move higher when the number of shares within that index are beginning to trade lower. So at some point in time, there will be a change. Either price will correct to the internals or the internals will correct the price. And if that happens, it is typically around some type of news event. So use caution. We could see something like this next week, or something's going to happen. We'll get some type of news and the internals will strengthen and support price. And if that happens, we are potentially going to see a continuation of a huge rally. It all depends now on what happens with the internals the first part of next week. Have a great weekend.